This is a paid advertisement on behalf of Brazil Potash. What's going on, guys? This is Aaron from Departures Capital, and we're here with Matt Simpson, CEO of Brazil Potash. Pleasure to have you on today, Matt. How are you doing?
Doing great, Aaron. Glad to be back.
Yes, exactly. So I'm excited to be talking about the company, getting a full update from you. It's only been a couple of months since we last spoke. What's new at Brazil Potash since our last update?
We've made a lot of progress since we last spoke. One of the biggest things we did is brought on a new president in Brazil, a guy named Sergio Lete, who has over 40 years experience raising billions of dollars for mine construction, primarily in Brazil. In addition, we received authorization from the Brazilian government to extract water from the local river, which avoids us having to sink, I believe it's 16 different water wells, which will save close to 40 million on our construction cost. And most recently, we've started to receive inbounds on various parties that want to construct our port, our steam plant, provide the trucking service from the plant to the port. And this will all be on their balance sheet, which is great because it reduces, in our case, up to about 350 million of the construction capital.
That's phenomenal. So there's a lot happening around global trade right now, tariff supply chain shifts, renegotiations. How do these changing trade flows potentially create an investment opportunity in potash?
It's amazing with the amount of trade that's been impacted by tariffs. We hadn't seen a single cargo of soybean from the United States hit China until October of last year. And a lot of that has been displaced by Latin America. So Brazil specifically has actually benefited from these trade flows. And kind of playing the clock forward, I think it's going to be super interesting this summer to see what happens with the Canada-Mexico US trade agreement, because much like Brazil, the US imports 95% of its potash. The difference is that 85% of it comes from Canada. So if President Trump does tear up the trade agreement and applies tariffs to potash, we're likely going to see a reduction in the amount of potash that's sold by Canadian producers into the US, and those tons will be displaced to other markets traveling much longer distances. And the US will then be required to import from the only two alternatives it has, which is Russia and Belarus. So overall, I think, again, this is going to mean possibly higher prices in the medium term, which will ultimately benefit Brazil Potash.
So most investors don't realize the US imports about 95% of its potash, with roughly 85% coming from Canada and the rest places like Russia and Belarus, as you just mentioned. How does that concentration of supply impact pricing, food costs, and long-term strategic security?
Well, we're really exposed, Aaron, because there's three countries, Canada, Russia, Belarus, that supply 80% of the world's potash. So you need to really buy from one of those three if you have any sort of high demand. And Brazil and the US are number one and two in the world in terms of import dependence. Brazil's about 22% of a roughly $30 billion a year market, and the US is not too far behind. So when you have such a high concentration, it really makes us exposed. And that's why Brazil Potash is so important. It's just not another mining project. This is actually providing a fourth major high volume supply of this critical mineral essential to grow food.
So with the recent Mercosur trade deal and US soybean exports to China being restricted, Brazil seems to be gaining share in global agriculture. How does that shift increase fertilizer demand domestically in Brazil?
Yeah, so what the Mercosur is, because it's not necessarily well known in North American markets, but it's very, very topical. When I was over in Europe, I was constantly asked about Mercosur. This is a trade agreement that was struck between several Latin American countries and Europe to basically reduce import barriers. And what this is likely going to result in is a substantial increase in the amount of agricultural goods that are produced in Latin America that are sold into Europe. So obviously, if you're going to grow more crops, you need to have more inputs, which means more fertilizer, more grain and seed. So this is ultimately going to result in a higher amount of fertilizers required by Latin American producers and specifically by the Brazilians.
So when you step back and look at all of this, tariffs, shifting trade alliances, agricultural realignment, where does Brazil Potash fit into the broader macro story, and why should investors be paying attention right now?
Well, again, this is absolutely mission critical project for global food security. By having a fourth major supplier of this key nutrient that has no substitute to grow our food, it's going to help ensure globally that we have a much more sustainable food chain. And if you're going to build a new potash mine, Brazil is just the most important place to do it, simply because today Brazil already exports about $165 billion worth of agricultural goods. It's one of the only countries in the world that can grow 2.5 crops a year. Countries like US and Canada, Europe can only do one crop because of our colder winters. And Brazil has the highest amount of fresh water in the world. Their weakness of their Achilles heel is that they import 98% of their potash when the second biggest basin in the world potentially is sitting in their backyard.
Totally. So thank you for that update, Matt. It's been a pleasure always having you on. It's going to be an exciting year for you. Things are always changing, trade and all of that. So look forward to covering the story, and we'll have you back on for an update in the near future.
Looking forward to it.